Hello, and welcome to the May edition of the Inside Scoop. I am Sam Beveridge, Customer Risk Manager with Ardent Mills Solutions. This month's World Agricultural Supply and Demand estimates included the USDA's first forecast for balance sheets of the 2018 and 2019 crop years. Global soybean and corn ending stocks were reported well below average trade estimates that were based largely on an increasing global demand for soybeans and China's destocking of its corn inventory. Wheat results pushed the market lower by the USDA stating a larger than expected hard wheat crop, even with production figures in the former Soviet Union below market expectations. As a result, the report is friendly towards soybeans and corn, while being neutral overall with wheat. We can't take our eyes off of these markets, so let's dive deep into this month's numbers. Welcome back. The USDA's May WASDE gave us three major themes. First, corn. The latest WASDE brought further cuts to world production by 500 million bushels, giving us little room for error in this year's production. Second, soybeans were given a bullish price signal driven by increased demand in China and a decrease in Brazilian exports. And third, wheat did not shock the market. World wheat production is forecast to decline modestly from the record 2017-2018 crop. Big reductions are being seen in the former Soviet Union, while the U.S. hard wheat crop is scheduled to beat trade predictions, resulting in 647 million bushels. Okay, let's take a closer look at corn. New crop corn production shows that we have deviated from last year's pace. The USDA came up with a 14 billion bushel production number that was down 500 million bushels year over year. Acreage is off from last year, as they are still calculating with a 174 bushel per acre yield. Exports were lower by 125 million bushels, and ethanol moved higher by 50 million bushels. All in all, total use for the 2018-2019 crop was pegged at 175 million bushels less than last year. This leaves us with a 1.68 billion bushel carryout that is down 500 million bushels from last year. Plus, the Chinese continue to draw down stocks year over year, pushing world stocks to use ratio to an all-time low of 15%. Are we going to see $5 corn? The scenario is ripe for advances in corn with late plantings, strong export demand, and this lowest stocks-to-use ratio on record. Now, let's talk soybeans. In soybeans, world demand pace is estimated to be robust once again. And with world ending stocks turning lower, we see prices remaining firm. The USDA increased exports for this year's crop by 225 million bushels over last year, while reducing ending stocks by 125 million bushels. Are these adjustments inflated by the pending outcome of tariff talks? While many are focused on tariffs, there is still a strong sense that China will need U.S. beans to meet demands for this year's crop. South American production was ever so slightly higher by only 1 million tons. Finally, let's talk wheat. The U.S. new crop production is 1.82 billion bushels, up 5% from last year. The surprise in the wheat market today was the 647 million bushel hard wheat crop here in the United States. Oddly, Kansas came in at 271 million bushels, which was much higher than the annual wheat tour's estimate of 243 million. The market has been moving lower this week and now seems to be capped for the time being, as other classes are available and demand is not calling for additional bushels from the U.S. Here in the U.S., soft wheat production was pegged at 315 million bushels, while spring wheat was pegged at 550 million bushels. It looks like spring wheat in the U.S. and Canada helped take the steam out of last week's rally. Okay, let's wrap this puppy up. All in all, the post-report day ended quietly. Looking forward, soybeans and corn remain firm until the market finds bushels from U.S. plantings or prices stem some demand. The wheat markets still need to prove out the USDA production values, and we can expect the US to remain a domestic market from here on out based on current world values. That's all I've got for you today. But don't forget, Ardent Mills Solutions is here to answer your questions. So if you would like to discuss the markets as they relate to your flour buying needs, please call or email me. I'm Sam Beveridge. Have a wonderful day, and we'll see you next month.